Hello, listeners, and welcome to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me for our regular weekly chat on markets and geopolitics is Rob Larity, our chief investment officer. Rob is nose deep in earnings and things like that in the U.S. macro cycle, and we talk about that. I was recording a lot of different podcasts this week, and there's also a ton of stuff happening in the world. So we give you some thoughts about U.S. macro and Europe, and then also some thoughts about how geopolitics and investing are the same and how to parse people that you can trust in those spaces. Hope you enjoy the episode, and we've got some really great episodes coming next week and the week after that I'm really looking forward to sharing with you. If you would like to talk to us about our wealth management services or our consulting and advisory services, you can email me at jacob@cognitive.investments. We continue to have lots of new listeners, and so many of you have actually put up new reviews and ratings on the podcast. It is so helpful. Thank you so much. If you haven't done so already, it takes 5 seconds. It's a big help for us. So thank you. Cheers. Hug the ones you love. See you out there. All right, Rob, I don't have a funny intro this week. I'm completely bankrupt. I have nothing for you. Do you have any jokes for the listeners?
No, I really don't. We ran out of jokes? Come on. Usually.
Okay, well, I'll have to go into my really old basket here. Like, this has nothing to do with the podcast at all, but do you know what the Buddhist said to the hot dog vendor?
What?
Make me one with everything. And then, the Buddhist pays with a $20 bill for his hot dog, and he comes back and he takes the hot dog, and the hot dog vendor doesn't give any money back, and the Buddhist says, well, where's my change? And the hot dog vendor says, change comes from within. I could go on all day.
This is what they come for.
How's it going? This is what they come for, apparently. We've been getting all these reviews about how great the podcast is, and I just ruined it all with my Buddhist dad jokes.
Things are good, just buried in earnings season, so it's nice to emerge a little bit and talk about big picture stuff rather than, quarter to quarter changes in how many beers people are ordering at Chili's restaurants.
Well, if U.S. GDP growth is any indication, it feels like they're ordering a lot of beers and margaritas at Chili's. I also saw something, the New York Times had some quote from some woman who was saying Americans aren't going on one vacation, they're going on 3 vacations and 4 vacations, which this is me informing you that apparently I need to go on another vacation this year. But maybe we can start with U.S. macro, because when you look out at the world, it's really strange. Like the last couple of weeks, there has been so much angst out there for a lot of reasons. But, Israel is just starting to maybe go after the Gaza Strip. It hasn't gone in force and seems to have agreed with the U.S. to delay its invasion. Oil prices are back down now, circling towards 80. The crazy guy didn't win in Argentina. The right-wing anti-Europe voices didn't win in Poland. You start stacking everything on, like the U.S. economy is great and the world is, I don't want to say calm, but like we're not getting all the doom and gloom we've been promised for. But maybe the place to start is U.S. macro, because amidst all of the noise, it seems to me that the most important thing that's happening this week is U.S. GDP in quarter 3 was up 4.9%. And so now you've got Japan and the ECB and China, everybody running around and thinking about interest rates, or gold is up and Bitcoin is up and everyone is confused. So maybe we start with U.S. macro and we can back our way into the other parts of the world.
Yeah, well, I guess doom and gloom doesn't move in a straight line, right? Like most things. I guess the theme for U.S. macro is cause and effect. So we've been on this podcast and in our research meetings for like 18 months talking about how we think the U.S. economy is more durable than most people assume, that interest rates are probably going to go higher than people assume, and that bond yields could reflect that. And now, like as you said, the GDP number is out, all the data has come out, and the headline of the newspaper is, hey, the economy is great. I think literally in the Wall Street Journal, it said we were supposed to get a recession and now the economy is reaccelerating. So I think that's vindication of what we've been saying, but cause and effect, because now, rising rates have an impact. And even though, as we've talked about recently, some of those transmission mechanisms might not be working in the same way that they used to, or working in the way that the Fed kind of traditionally assumes, you're starting to see some evidence that things are on the margin breaking a little bit. So 2 things catch my eye. The first is in the non-residential construction area, which in the US has been one of the strongest areas. Like one of the key reasons why the economy has done so well is because we've been building so much in terms of manufacturing capacity, data center capacity, multifamily apartments, which are only just starting to slow down now. I mean, we mentioned a while ago that there's more apartments on the order books than at any time since 1974. It's a ton of building going on everywhere you go. And two things within that caught my eye just in the last week or two. The first is the September data for the Architecture Billings Index came out, and that's it's a leading indicator for non-residential construction. So it's a measure of how the billings of architectural firms are trending, expansion or contraction. And it was a remarkably bad number. All of a sudden, we went into levels that were so low that we haven't seen outside of recessionary periods, which doesn't mean that we're entering a recession because, as we've said, like different areas are moving in weird ways at different times. So everything isn't going to move together, but that's a big plank of what's been driving the US economy. And a key early indicator for it just went totally south. So that is worth noting. And then the other thing is just on single family homes. So we've been talking about this notion, which everyone understands now, that as mortgage rates went up, you actually had more demand for newly built homes because the inventory of homes to buy has dried up because no one can move. Well, now some of the very early indicators you're getting, because now mortgage rates have taken another lurch, like significantly higher, is that demand factor, the contraction of demand, is even more outweighing the lack of supply. So all of a sudden you had that sort of equilibrium that was holding, and now the demand side there is starting to fall off. So if you look at the stock prices of home builders in the last month or so, they've gotten crushed. And that's Mr. Market's telling you something there. So it's too early to say, we've sown the seeds of the end because the economy is so strong, but it's definitely worth keeping an eye on those things because it's forget about the GDP. Like, who cares about Q3? That's over. What matters is how little things are changing on the very edges of the margin of what people are watching.
Yeah, although, in all the commentary about Q3, like everybody's saying, because I hear you and I hear your contrarian impulse to zag while everybody else is zigging. But also when you read all the summations of the print, of the GDP print, everybody's saying, well, this is the peak. Now it's definitely going to go down from here. This was just the Goldilocks thing where energy prices were low and the US consumer still had some COVID money left over and everything, and it's going to go down from here. And it's just like, how many times are we going to trot out that old narrative where this is the peak and it's just going to go from here? Because the US consumer continues to consume, I guess, way more than Mr. Market is expecting, or way more than even companies are expecting. I mean, companies before that were warning about, revenue shortfalls are not getting there, and customers are paying the price. So I don't know. It seems like as long as the US consumer is good, the economy has legs. Is that too simplistic?
No, I don't think it's too simplistic because, as I said, there's different planks in different areas moving in different directions. And that has been a major outlier. So let me give you an anecdote, right? So we are way far into the long period of the economic expansion. And by all rights, we should be in the tail end of that expansion. And, as we said, the manufacturing economy has been slowing down, et cetera, et cetera. I went to Boston last week or 2 weeks ago, as you know, and I was having breakfast with my sister at a diner. And the guy who owns the diner, my sister has a little HR consulting firm, so she helps people find employees and deal with HR stuff. We were trying to leave, obviously in a rush to get somewhere, and the guy who runs the diner literally chases down my sister and says, Bonnie. He said, I need you to find me a cook. I need a cook. I'm desperate for a cook. So that's the story. That's the anecdote that illustrates what is sort of the ongoing labor shortage. And if you look at a lot of the numbers, I think that's the most striking and also one of the most optimistic things about the U.S. economy is that the price of labor is going up, and that has positive and negative impacts. But, at the end of the day, people who did low skilled labor for a very long time, they made no money on a real basis. And now there's inflation, and you could argue, well, they're not making as much money now, but on a relative basis, they're doing better than they were before. And that's a major, major change that I think we still have to sort of digest because it's a societal change. And I know we try to incorporate Downton Abbey into almost every episode, but it's sort of like, I was thinking about this the other day. What it reminds me of is after World War I, where you had all of these people who were working as servants in other people's homes. And then just after the war, like people just didn't want to do that anymore. And I wonder if we're going to look back at this time and people are going to be like, you mean people, they sat there and they made burritos with their hands all day? Like, I can't even fathom, like, what was that like? And they'll go and they'll see reenactments of this, in museums and stuff. Like that's a huge, huge factor. And it does mean that the consumer, like you're not going to get the unemployment spike that you saw in the last 3 or 4 economic cycles. And how that plays out is going to be very different. It's not going to be the same as far as you get this deflationary slowdown and bonds collapse. And we're not in an environment like that.
Yeah, I have 2 things to push on there, and the second one is geopolitical, but the first one is just explicitly political, which is if you look at Joe Biden's approval ratings right now, they're as shitty as they've always been. The disapproval rating is at 53.7%, approval at 40.4%. I'm reminded of James Carville, our Louisiana hero down here, and the Bill Clinton campaign of 91, 92, and it's the economy, stupid. But if it's the economy, stupid, the economy it's great. Like by any objective measure, by subjective measures, by all the anecdotes that we hear. I mean, I'm looking out at my house every day. I have to put on the noise cancel feature because they're ripping up this house on this side and this one over here, and that's with mortgage rates kind of ballooning. And yet, like none of that goes to the executive. And I'm not saying one way or another whether I care or not, but it is weird that the data tells you that the U.S. economy is doing so well, and yet people feel like the economy is not good, and they're taking that out on the president, who actually seems to be presiding over a good economy. I don't know how to make sense of that data and what that data is telling me. Do you?
I think sentiment is a very strange and difficult thing to measure because you're asking a political question, and oftentimes people don't answer the question that you think you're asking. What feels right is that sometime in like 2017 to 18 period, something fundamentally changed. And people's, like, even now, like we had a pandemic, we had all these annoying government restrictions, we had inflation, like difficulty to get goods. Like even then, the consumer sentiment data is pretty good relative to where it was in the mid 2010s. And it's not a political thing. That was the case under Trump. It was the case under Biden. I'm not talking about approval ratings of the executive, which is a political question. Just sort of the question: are you doing better than you were? And what's your outlook on the future? That kind of stuff. So that seems to be a marked change from what we had been experiencing, and there's a lot of reasons for that, but. This is a good thing politically, and we've talked about. I don't want to talk about U.S. politics today. Frankly, I'm sick of it. But one of the things that, if you look historically, that tends to lead to better political outcomes, less infighting, all that stuff, is just simply how quickly are nominal wages growing, and how hopeful are people for the future. And some of those indicators seem to be going in the right direction, even if people don't like the president or they, are cranky about what's in the news. That's fundamentally, I think, a little bit more positive than those surveys might suggest.
Yeah, I hear you. There's still a disconnect there that, from a data perspective, bothers me. But the second thing is maybe you should tell the diner guy that he should just go to the U.S.-Mexico border because we're getting another surge of migration at the border. So arrests of all nationalities entering from Mexico in September was 218,000 roughly. That's up 20% month on month, and it's approaching the all-time high that was set last December 2022. One of the reasons I wanted to bring it up is because for the first time in recorded history, Venezuelans are the largest nationality being arrested at the border, surpassing Mexicans. So 54,000 roughly encounters for Border Patrol of Venezuelans in September versus what was the number for Mexico? I don't have the number for Mexico on top of me, but it was 33,000 for Venezuela the previous month. And we talked a little bit last week about U.S. withdrawing oil and gas sanctions on Venezuela and all the terrible things that are happening in Venezuela. And I did a podcast with some other guys about that too. But it just seems to me that if the problem is getting unskilled labor, like that's also not a problem. Like migration is a big problem, and maybe that's one of the political issues that is driving down Biden's popularity rating. But the United States is still a beacon for all of these migrants that are leaving not just Mexico, but leaving places like Venezuela, like Colombia is in the top 5, which is kind of incredible. I mean, you can attract some higher skilled labor from some of these countries that are going through political turmoil if you can think that way about migration policy.
Yeah, and it's. I mean, the U.S. thing is smacks you in the face. But one thing that caught my eye on the Knowledge platform this week was your note about South Korean migration, and that was striking because I know in Japan the number of work permits that they've been giving has been rising, albeit from a very low level. But even some of these, culturally very homogenous and traditionally sort of resistant to immigration countries, you're seeing these numbers start to tick up. And I wonder what that means, or what you think about that more globally, even beyond the U.S.
I mean, historically, it's really tough for, nation states like a France or like a South Korea or like a Japan to integrate immigrants over a long period of time. France doesn't actually ask their population about what their religion is because, they have to genuflect to their radical ideas of secularism. But, it's like probably 15, 20% Muslim population, Arab descent from Algeria or from other places and things like that. And those people will probably, we could be here in a century and the descendants of those people will not be considered French by the people who consider themselves French and things like that. It's always been the more artificial is the wrong term, the younger countries like the United States that have been able to integrate people in because they don't have as much riding on sort of the nationalist impulse. It's a little bit more flexible. That said, countries like Japan and South Korea are examples of countries where probably people didn't want to go there in the first place, and it was also particularly hard to integrate. But if you are getting that sort of cultural change, and if you've got it backed up by government policy, where the government is saying, no, this is what we want the diversity, that's it's a big deal. It's also really, if you contrast it with, say, what's happening in Eastern Europe, where Eastern Europe is getting this huge demographic dividend that we've talked about before on the podcast and in our In Focus piece about Poland, getting all these Ukrainian refugees to come in. Most of Eastern Europe has become fairly ethnically homogenous. That's the dark inheritance of World War II, which is they killed all the diversity. If it wasn't the Nazis, it was the wars and everything else. So Poland is actually a fairly homogenous country. Romania, a fairly homogenous country. And yes, they're getting some of these Ukrainians in, but that's why migration was such a big deal in the European Union and why anytime it rears its head, it seems to cause more problems with EU politics than just about any other issue. So I don't know. I don't think we've gotten to the point in the global economy where things are bad enough that countries are really willing to lose that. You've got Japan and South Korea always forward thinking, but it's going to be a lot harder to turn society in that way and a lot harder to get those people to integrate. So,
and yet, unfortunately, it seems like the volume of people who are going to be wanting to leave the troubled places of the world is going to be continuing to balloon.
Yes. Another thing that was on the Knowledge platform last week, which which to me was one of the most important things I put on the Knowledge platform last week, was that story about how Chinese students just don't really care about going to the United States anymore, where the disruption of the pandemic and all the conflict about visas and the US-China trade war and everything else just means that Chinese students, where it used to be the United States was the place to be. It was where cutting edge research was. There was a lot of cachet in going to the United States and spending years there. And some of them came home and some of them didn't. My dad was a professor for decades at Emory. And the last 10, 20 years of his teaching career, a large percentage of his students were Chinese kids. And he was teaching Chinese kids Plato and Machiavelli and Hegel. And I've always wondered if he was sowing seeds of intellectual disruption that nobody even knew about from a small campus in Oxford, Georgia. But that's all going away now. And the Chinese either want to stay home or they're looking for other universities and things like that, which is why I think you've also got, places, Saudi Arabia, they're not only going after soccer and golf and everything else, they're also trying to build universities and trying to attract world-class talent to come to their country and do research there. Same is true of China trying to brain drain engineers from Taiwan and things like that. I think the global competition for human capital, it's a much harder story to talk about because it's people and the data is amorphous and you can't really engage it. But it has always been true that the countries that are able to attract talent from the disruptive places of the world usually do best. And to take it back to the United States, we could argue that one of the reasons the United States wins World War II and why Germany doesn't is because Germany kicked all the scientists out. When you kicked out the Jews, you kicked out a lot of scientists, and a lot of them came and worked on the Manhattan Project. And that's why the United States had nuclear weapons, and Germany just had Heisenberg staring at himself in the mirror. So,
it seems like, I haven't studied this in depth, but I've seen some analyses suggesting that immigration to the U.S., even legal immigration, has been going up, and especially through Canada and places like that. Could that be a hidden source of growth or strength, even as sort of the rhetoric around it gets worse and worse? Have you seen these numbers? Am I making this up?
No, I think you're right that I don't have the exact data at the tip of my fingers, but I think you're right about that. But for me, and you don't want to go into domestic politics, to me, the answer there is whether the United States can build a migration policy that can accommodate that. You'll get some boost just from people being interested in getting in that way, but we haven't had immigration law reform in the United States, I think, since 1986. It's a very, very different world with different labor skills that you needed, and different demographics, and different geopolitical relationships. So I absolutely think that the United States could use that as a source of strength, but it's going to have to create a policy apparatus and strategic goals around that, which, that's not the level of discussion that's happening, I think, in the United States. You can juxtapose that with, as you pointed out, South Korea. You have the South Korean government and the Japanese government saying, hey, we want migrants. We want this demographic profile with this skill set, and we will integrate them in this way. It's a very, very intentional sort of way of screening out who you want and who you don't want, whereas the United States is not even there yet. So the United States, I think, will always be a beacon for people from disruptive places of the world, but to turn that into an advantage, I think you do have to put some policy meat around it, and I just don't see the appetite there for it, at least not yet. Anything else you want to say about that, or do you want to turn to some other topics?
No, let's go away from the U.S. I'm so bored with the USA, as The Clash said.
Yeah, it's pretty boring, but it's kind of at the center of so many things. I don't know. There's honestly, this is one of those weeks where I'm struggling to light our way through the podcast because there's so many little things all around the world that we could spend 2 to 3 minutes on, and not ones that we could really. I don't want to I don't want to talk for a long time about topics that aren't worthy about it. I guess one thing I think is worth talking about is sort of the latest with the Russia-Ukraine war and how that works into what's going on into the European Union. It's been kind of an eventful couple of weeks in the Russia-Ukraine war. So Russia had a counteroffensive around Donetsk, or in the Donetsk region. It seemed to go well at first, but now most open source reports are saying that they're getting their butts absolutely kicked On the flip side, they are forcing Ukraine to prioritize resources and ammunition to beat back that counteroffensive, which is maybe the whole thing. Last week, we talked a little bit about how Ukraine seemed to push on to the left bank of the Dnipro River. Is that going to be a bridgehead for cutting off Crimea once and for all? Doesn't look like it. There hasn't been a whole lot of progress this week. A more disturbing thing for Ukraine for this week is you have reporting this week that the EU is probably not going to meet its ammunition quotas. So they promised earlier this year that over the next 12 months, they were going to deliver X amount of ammunition to Ukraine. They're about 30% of the way there, and it looks like European countries are asking for extensions on the deadline, which is, they're asking the EU for extensions on the deadline. Ukraine is not interested in extensions on the deadline. Ukraine needs the ammunition because they need to fire the ammunition in a war. So if it's not going to be there, they have to either, change the way that they're prosecuting the war, or they have to find another way to fight, I guess. And then the other thing is that Slovakia, their new Prime Minister, Robert Fico, even though he didn't do particularly well in elections, he has basically announced the halt of all military aid to Ukraine and has called on the European Union to not be a war project, but to be a peace project. And I know that probably nobody gives a crap about Slovakia, but Slovakia has a long history of being a conduit for black market weapons and things like that. Israel in 1948 probably doesn't exist if it's not getting black market weapons through what was then Czechoslovakia. So it's kind of telling to me that you have a country like Slovakia, which is saying, no, like we don't want to do this. And also the EU should be a peace structure, not a war structure, which cuts directly against some of the things that we're talking about in terms of our EU forecast. And it also goes to the core of, the German-French relationship and whether Germany and France are going to be able to stop squabbling and push some version of reform past the goal line in the European Union. And, last week, Germany and France seemed to finally agree about power subsidies. Germany's angry about France having nuclear power, and they were worried that they were going to have to be buying French nuclear power at a premium. It had been causing a lot of trouble, but so they finally get through that disagreement. And yet the same week, now we're talking about deficit spending and government debt and things like that. And so it always feels like, it's one step forward, two steps back for the European Union. And I guess to round it off and to fit it into the U.S. macro conversation, the ECB today held rates steady. And, we have a short position on with the euro right now. Looks well timed because, the European Union is not doing particularly well on an economic basis. The high energy prices are starting to really chomp at the bit there, or that's the wrong way to use that phrase, but are starting to really impact performance. And that doesn't look good either. So I don't know. It's kind of a cloudy picture for Europe overall. Where do you want to dive in there?
Starting with the macro, so the industrial economy in Europe has been doing very poorly for 10 or 12 months now, and now the services sector is starting to follow it down. So I think that's part of the issue, especially services in France in the last month or two have slowed down, and that was previously one of the stronger outliers. So you're sort of seeing this recognition by the ECB that, we're not necessarily in the same position as the Fed, at least from a cyclical standpoint right now. And that seems to be where the recognition is in terms of the currency and rate expectations. One question I would have is just on Poland. So we haven't talked about this since the election. And the last time we were talking about Poland and the Ukraine sort of situation, it was around, grain imports and basically Poland complaining about Ukraine and a lot of these things. Do you think that the election of the Tusk administration is going to change any Polish policies in a major way toward Ukraine, or does that change our view of that situation in particular?
It doesn't. And I mean, our long form research piece about this before the elections, I think one of the first lines of the piece is, doesn't really matter what happens with elections. But that said, I think it closes some problems even as it opens up other problems. So it closes this notion that Poland is going to be a source of friction for the European Union, and that Poland is going to work with countries like Hungary, or it looks like now Slovakia, to try and push back against the EU in terms of rule of law concerns and things like that. The flip side of it is that the Law and Justice Party first of all, the president is still like sort of aligned with Law and Justice. So they're still going to give Law and Justice a chance to form the government. So probably Tusk is not actually governing here for quite some time. And he's also going to be governing in a coalition. He didn't win an outright majority. Law and Justice actually won the largest share of votes. And so maybe you get rid of some of these sort of, Poland to Brussels problems about rule of law, because you'll eventually have a Polish government that is willing to work with the EU on that. But on the flip side of that, you almost have a mini version of what's happening in Germany right now with the traffic light coalition, because the compromises that Tusk is going to have to make so that his anti-law and justice coalition all comes under the same roof, it's going to be pretty hard to metabolize all that. And you're not just going to roll back everything Law and Justice has done. They've been governing the country since 2015. So I think Poland probably has to turn more inwards and probably has a lot more domestic hand-wringing to do. But I do think at that broad level, no, Poland is going to be even more probably pro-Ukraine, which is ironic because Tusk always got accused of being, pro-Russia because of his dealings with Russia at a very different time period. But no, I think you'll see strong support from Poland for Ukraine. And I think you'll see that Poland is going to try to align itself more with Germany and France in particular, and with the European Union in general. The last thing I'll just say there is that one of the reasons that Law and Justice, I think, has done so well over time is because even though Poland is arguably the most Europhilic country in the bloc, I mean, Poles love the European Union. Polls of polls say that something like 85 to 90% of the Polish people like the European Union, trust the European Union, want to be closer to the European Union. At the same time, Law and Justice has always pushed back against that and rightfully sort of said, look, the rules here were made by Germany and France for Germany and France. We only came to this party, I think Polish secession was 2005. I might have that date wrong, but around then. And if you want to make new rules about this, it needs to take into account that we are the biggest power in Eastern Europe. We want to be a regional power in our own right. You need to treat us like that. We're not just, some country that you sweep underneath the rug. So I don't think any of those problems have gone away. But our thesis on Poland really has nothing to do with the vagaries of elections. It has to do with the fact that the times that Poland has done well in history is when Germany and Russia are both weak. And it's not very often that both Germany and Russia are weak at the same time. They are both weak right now. So Poland has this opportunity just sort of there. You tack that on to the demographic dividend that they're going to get from the Ukrainian refugees. You tack it on to the fact that Germany, even with the problems that I just talked about, needs to expand supply chains, needs to sell markets to new places, and that Poland is a good market both for labor and even for consumption of German products. Like, you start to put all of those things together, and it looks like a good picture for Poland no matter who is in power. So, I think it changes some things around the edges in the short term, but I don't think I wasn't worried about elections invalidating the thesis one way or another.
It's almost ironic because when we wrote the piece, before the election, the consensus narrative seemed to be very doom and gloom, very, Poland is going off the precipice. And now, after the election, it seems almost the opposite. There's, sort of pie in the sky hopes and dreams about all the things that they're going to accomplish, and it's going to be a new era and that sort of thing. But I guess this is geopolitical investing at work. As you point out, our piece is like, well, these things they don't change the fundamentals of the situation, and that's longer lasting and more deeply rooted than the vagaries of an electoral outcome. And that's how you have to make decisions as an investor.
Well, but before you move on from that, I just want to say, at every single place that I've worked before CI, we always struggled with how to deal with elections from a geopolitical point of view, because they're always in the news. It's what gets people to stop whatever they're doing and look at some other thing for a second. So you don't want to lose their attention. But you also don't just want the argument to be every time, well, elections don't matter, and it's really, look at a map and these grand forces that blah, 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 blah. Like, nobody wants to hear that too. So you have to give them something that they want. And it's also, elections can also really change things. Like, if you get a surprise result, like let's say Milei had won in the first round in Argentina this past week, we'd be talking about nothing but Argentina's elections and the chainsaw of the bureaucracy and dollarization of Argentina and things like that. So there can be big changes. The problem is that the tools of geopolitics are meant to predict the behavior of states over periods of time. There is nothing in the geopolitical toolkit that gives you any ability to forecast an election. And not even the pollsters can forecast elections. I just mentioned the Argentina election. The consensus view there was that Milei was probably going to win, or at least he was going to be in first place and would, walk in the runoff. Milei was so confident that he was inviting friends from abroad in to come and celebrate. But if you actually looked at some of the polling, there were a couple polls out there that showed in the last 2 weeks his support had really declined. But again, the point there is there's nothing in my geopolitical toolkit that could have told me what was going to happen in that primary. And I think that when people use the term geopolitics in the context of elections and investing, that's actually where you get in a lot of trouble, because geopolitics tells you nothing about that. It can give you the context to understand the result, and maybe it can give you, what do I do after I have the results in my hand? But if you start trying to use geopolitical tools to predict who's going to get elected or whether Britain is going to vote to leave the European Union, that I think is a source of a lot of mistakes, because it's not what geopolitics is supposed to be used for.
That's another thing that sort of gets my goat about the geopolitics thing, is especially with the war in Israel and Palestine and that sort of thing. You're seeing all these headlines about, this is geopolitics, and people are scared about owning Turkish equities because of geopolitics, and the geopolitics have emerged. Like, the geopolitics were always there. This is, correct me if I'm wrong, but this is sort of a symptom of the underlying geopolitics. So a war is not geopolitics, or an election is not geopolitics. Those are the things that happen, in large part as a result of the analysis that you do. Is that fair to say?
Yeah, I think geopolitics at the end of the day is just a framework. It is not an elemental force that exists on top of everything else. It's a way of trying to understand the world. So a good example of that is, if you're a good geopolitical analyst, a regional war that was going to affect shipping in the Suez and affect oil out of the Persian Gulf is a scenario that's probably on your framework. And when you're constantly updating your view of the world, you're checking in on, well, what is the likelihood of this? What are the signs that I would need to see things going in this direction? It's that kind of framework piece. Geopolitics in and of itself, I don't know. It's right now it's gotten into the zeitgeist, and this is true in general of the media. David Judson, who was one of the first guests on this podcast a long time ago, if you want to go back to very early episodes and listen to my episode with him, he didn't talk about what I'm about to say. He actually was talking about water issues in Texas. But he worked in journalism for a long time, and he once told me, journalism and media, basically, they have 5 or 10 narratives that they just recycle. And it doesn't matter who the players are, what the subjects are, or things like that. Go and Google David and Goliath stories in business, and you will see thousands of articles about David versus Goliath. And it's different companies and different sectors and different fundamentals and everything else. But the headline is David and Goliath. The story is David and Goliath. It's exactly the same thing. I think what has happened with geopolitics in the last 10 years is that now geopolitics is in that toolkit. So something happens in a market like Turkey that nobody understands, and they go, it must be geopolitics. Erdogan said something terrible. We saw some badly translated transcript of his comments. We're going to say that people sold off Turkish equities because Erdogan said something crazy. That is the level of depth that goes into thinking about international political developments right now, which A, should scare you, and B, keep doing it, media. It's why I have a job. So don't get smart anytime soon.
Well, on that subject, a mutual friend of ours just WhatsApped me a link to this Financial Times article that just hit 2 hours ago. And the title is Goldman Sachs Enters the Geopolitical Advice Business. Goldman Sachs is setting up an institute to analyze geopolitics and technology, the latest firm to bet on demand from companies for advice on how to navigate a disorderly world. That's funny, because that's exactly what we do.
It is exactly what we do. And it's funny, I've done 2 interviews this week where I was asked about our approach to investing and how we use geopolitics. And this is another thing I think in particular that investors are getting wrong, because the question I always get is, okay, well, what is your geopolitics strategy? What positions do you have in a geopolitics strategy? And my answer to that has always been, we don't have a geopolitics strategy. If you try to invest just using geopolitics, I guarantee you will lose money. Maybe you'll feel good about your portfolio. Maybe you'll feel good when you're having a drink with your buddies and you could talk about what interesting thing that you did. But geopolitics by itself is not going to help you at all. Geopolitics, at our firm suffuses all of our strategies. So even down to the equity strategy. If you have a stock that is in gold mining and has a gold mine in Turkey, okay, so I come in and say something. If we have a position on Germany, maybe that's a little more geopolitical and more thematic, but it's a part of every single one of our strategies. And I think people need to get away from geopolitics as a fad and more just, hey, it's part of the toolkit. And it was always a part of the toolkit. It was just more boring when the United States was the most powerful country in the world and everything was globalization. And you could do geopolitical analysis for an hour in the morning and go to lunch and be right. You can't do that anymore. You can't just park the money in the S&P 500 index because the United States is super powerful and have a day. Like, you actually have to spend your time on a week like this, like running around in circles, trying to get your arms around all the different things that are happening, each one of which can change a strategy or a position or even your view of the world. So,
well, this is the part where I say again that this is the difference between being a research or a media company and being a wealth manager. Because, as you say, geopolitics suffuses everything that we do. Well, we don't have a geopolitics strategy. I guarantee you within a month, Goldman Sachs is going to have a new, geopolitics VIP index that it'll be flogging to its clients, because that's what firms like that do. They're in the business of selling you shit. We're literally not on the sell side. We're on the buy side. We're the ones investing. So we don't have to put things into neat little categories that don't make sense to try to, be on the zeitgeist of the moment and say, oh, here's our AI strategy or our geopolitics strategy and the 20 names you want to own on geopolitics, like whatever those would be. It's some bullshit, I'm sure. But that's why I read these things. I don't worry. I think it validates that we're going in the right direction, but it also validates the fact that, you can't really do what we do because these other guys just aren't structured to be that way, if that makes sense.
No, I think that's a good point. I mean, look at probably any international index in the world right now, and I guarantee you that Taiwan Semiconductor is one of their biggest positions. Whereas, here at the firm, we're looking at Taiwan's future and the semiconductor industry's future and everything else. And like holding TSM as a large position in this geopolitical environment would scare the crap out of me. But, how many people are in ETFs or in mutual funds or have an advisor who's telling them, no, like best chip maker in the world, like pays a 2% or 3% dividend, like blue chip stock, blah, blah, blah. Like, I don't know, all those things of the past. When you're trying to unearth the possibilities in the future, the things that we're doing and using this type of insight to direct us is really important. But it's also why I value like our relationship so much, and also the relationship with everybody on the team who doesn't get on the podcast, because they're off actually doing research. Like, they make us look smarter because they go off and they're the ones, pounding the pavement with individual companies or looking at the balance sheets and we get to sit on top and sort of put the pieces together. But it's impossible to do all this with a guru type perspective, which is another problem, both in investing and geopolitics in general. I've noticed that in general. Like, we were throwing some shade, I believe, at Paul Tudor Jones last week, and also at Warren Buffett. But I mean, geopolitics and investing share this thing where there are the gurus, and when the guru says something, it moves markets or it shapes narratives. And I don't know, like I feel like once somebody gets to guru land, it's as if it's like an athlete who's gone to Dancing with the Stars. You can sort of, they've given up.
Just to be clear, I love Paul Tudor Jones. So I don't want to be seen as throwing any shade in his direction, because the man is a legend.
No, if he was here, I would tell it to his face.
And by
Paul,
the way,
Paul, if you're listening, Paul, send me an email. Come on the podcast. I'm happy to tell it to your face, and you can tell me all the ways I'm an idiot.
By the way, a call out to any listeners out there. If anyone has access to the Trader documentary, please send it to us. I don't know. Do you know what I'm talking about, right? As a brief aside.
I don't.
It's a documentary that they made about Paul Tudor Jones in the late 1980s. It was on PBS. And it's the coolest thing ever. He shows how he trades, and he's kind of talking about how he bought Bruce Willis's sneakers and stuff. So I think he's kind of embarrassed because it's a little cheesy. And he bought up all the copies, or somehow you can't get this anymore, but it's a wonderful documentary. It's super cool. And he's done everything he can to get rid of it. So there's bootleg copies out there. And if anyone has it and you want to do a solid to us for providing this wonderful content to you, please send it to jacob@cognitive.investments. So a brief aside there. But one more thing on gurus, because I think this is really important for investing, because you see this all the time. And I think it's important to talk about this because so many people, it's human nature to want to put your fate in the hands of someone who's a very high profile figure. And the problem with investing and doing that compared to other fields is that in other fields, even like private equity or venture capital, like there's persistence in those other fields because people become prominent and then they get a sort of recurring advantage because they get deal flow that others don't get. They get opportunities, they get relationships that they can leverage. And in almost every other field, being a guru or being prominent or being like this huge figure like Paul Tudor Jones or Warren Buffett, it confers a huge advantage. So it's rational to bet on those people continuing that. In almost every field of investing, it's the opposite. Because with some exceptions of people who are just huge, like Warren Buffett is huge enough where he can strike deals that others can't, and that does confer some advantage. But it's probably outweighed by the fact that he has to deal in such large sums that his opportunity set is so limited, for example. Mm-hmm. But really the point I want to make is more generally, in investing, it's almost like, you sow the seeds of your own demise, because as soon as you become famous or successful, then you lose that humility, because Mr. Market doesn't give a shit who you are. Mr. Market will just crush you, no matter how prominent you think you may be. And it's very, very easy to lose that balance and that humility and lose sight of that when you become a big deal. And you see that pattern all the time with people. Like, I don't want to pick on individuals, but he's such a big figure that I think it makes sense. But look at John Paulson, for example. Struck it huge, with this really outsized bet in the 2008 financial crisis. Then went on to almost have success in nothing that he did afterwards, because he tried to be too big, tried to do too many things, got, way out over his skis, and, it just never was able to attain that again. So it's really hard, because you want to follow the people who've had success and say, oh, well, this shows how skilled this person is. But in many ways, and the data supports this, people give money to fund managers after a long run of good performance, and usually they top tick their performance. So it's very difficult in investing, because you really kind of have to go with the people who are going to be able to manage, and maintain that humility, or go with the people who have not become huge stars yet, because, they haven't planted the seeds of their own downfall.
Yeah, I want to say something about that too, because it's true in geopolitics. The guru of geopolitics these days is probably Ian Bremmer. And nothing I'm about to say should be taken as a pejorative comment on Ian Bremmer. He was one of the first movers. He's very, very brilliant. He's built a very successful company in Eurasia Group. But I noticed when he was covering the outbreak of the most recent Israeli-Palestinian war, he very quickly went down the path when he was doing TV interviews of using the word should. This is what the United States should do to support humanitarian. This is what Israel should do in the context of this. This is what the Arab states should do. And I have tried to banish the word should from my vocabulary. Some of you know my personal background. If you don't, you should just know I have every emotional and personal reason in the world to get up on my soapbox on the Israeli-Palestinian conflict and scream at the top of my lungs what my personal political views are. I haven't, and none of you know them, because that's not my job. That's not why you listen. You listen for the objective analysis. You listen for how this is going to affect the world, how it's going to affect markets, things like that. So I really have to discipline myself and go play pickup basketball and trash talk with the guys on the court to get all of the emotion out, and then come here and do my little Buddhist jokes and tell you what I think is happening on an objective basis. And he was not. And this goes back to something that Roger Baker, who's been on the podcast multiple times before and was one of the guys that trained me at Stratfor, he always said, when you think about the life cycle of an analyst, the way that the American sort of job market pays people is wrong. It's more of a straight line up and to the right, where the more experience you have, the more money that you make over time, because theoretically you're better and better and better. But the job of an analyst, and I would say the job of an investor too, you actually don't just get better over time. There's a sweet spot in the middle between when you're roughly 35 and 50 or 55, where that's when you're at your best. And it's when you're at your best because your intellectual flexibility is at its maximum, but you also have some experience. You've seen something in the world, so you're not completely green. And you could still be valuable once you're past 55 because you've seen a lot more of the world and you can provide context and history and a perspective that most people can't. But just physically, your brain loses its ability to be flexible. It is harder to change your mind. It is harder to keep up with research. It's harder to understand new things. In the same way that somebody who's fresh out of college, they have no perspective. They have no sense of history. They've seen a couple things and they've read a couple books and they're trying to make it all work, which is why you sort of always want your analyst teams to be in that 35 to 55 category. And you want people on both ends of the bell curve. You want some people with experience to keep them honest, and you want young people whose minds are just completely fresh and can go out of the world. But when you're sort of like an athlete is at their prime or a basketball player is at their prime from 20 to 32 or something like that, an analyst's prime is 35 to 55. And when you get out of that window, I'm not saying that somebody who is past that has lost their fastball. In some ways, they have something that I also need to tap into as well, but they're not doing that stuff in the moment. And I think it's not about humility. I think this goes straight to Philip Tetlock and super forecasters and all of his work, because he has shown scientifically and demonstrably that the analysts and investors that do best, especially in forecasting politics, are the ones that are flexible, are the ones who can change their minds, who can be up here passionately making a case, and then the very next week say the complete opposite on the podcast, which I've done sometimes. I've come up here and said, this is what I think, and then the next week I've said I'm completely wrong. And the moment I lose that flexibility, I'll know that it's time for me to take a step back and let other whippersnappers go out there and give them my rich perspective. So, and the last thing I just want to say is, I think that's true of both geopolitical analysts and investors, because ultimately, at the end of the day, no geopolitics analyst is going to get everything right, and no investor is going to get everything right. The real trick is to know when you're wrong, and to know when you're wrong before anybody else is wrong, and to hedge your risks accordingly, and make it so that your big bets you can lean into when you're right, and the bad bets, which there are going to be lots of bets, you were the one who realized, okay, as much as I loved that argument, as much as I loved that position, I got to get out, and I got to completely reformulate and start fresh. And I think when you're talking about gurus who have quote unquote lost their humility, it's not about their humility. I think they're old and their brains are not wired in that way to be that flexible. That's something that you have to be a little bit younger to do. And why, like I said, it's that bell curve when you're in the land of analysis, where the 35 to 55s are the ones, it's not just that they're churning and that they have drive. It's literally a physical limitation on both ends of the bell curve. And it's that sweet spot that you want to listen to. So
I like your comments about should, and I'm trying to remember. I know you put a quote once in one of the decks that we provided to a client, and in the deck you said, I'm going to mangle this. We look at the world not as it should be or as we want it to be, but as it will be, and that's the only way that we can fulfill our duty of care to you as the client, or something like that. It was really good, though.
I'm glad.
Whatever it was touching.
No, but it's a really good, like, the moment you hear an investor or a guru or a journalist, if anybody starts using the word should, if anybody starts using prescriptive language with you, like, I mean, if that's what you want, like, fine, listen to them. But like, explicitly, that is not the job that we're trying to do. And some people ask me how I stay sane. I don't know. Like, I think I would go insane if I went the other direction. But as we've talked about before, I'm just a contrarian arguing with people all the time. So I think I'm in the right place. We got to go to a research meeting. Anything else you want to tell the listeners before we put our brilliant minds to work on our next great moves that are probably going to blow up in our faces?
No, I think you should do some work on preparing some jokes for next time.
For next time? Oh, you didn't like I thought that I liked the Buddhist one. That's really good. Okay,
yeah, well, it was okay. But you're in the big time now. You gotta up your joke game.
Okay, I'll I'll consult the previous Prairie Home Companion joke shows and see what Garrison Keillor has to offer me. Cheers, y'all. Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor.